Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is our 97th episode, Managing Concentrated Stock. Okay, so it's just me solo this week. Corey is diligently trading one of our newest team members, Matthew Navikas, who is part of our research and trading department. And so Corey's been working on getting Matt up to speed on all things trading, which has been a lot of fun. He's picking it up very quickly, and we're excited to have him on our team. So stay tuned though, Corey will be back as my plan to have him on future episodes. Before I go into today's topic, I hope that all of you listening or watching this are staying healthy and safe. Certainly, it's been a crazy year in 2020, and we just want everyone to get through the pandemic as safely as they can. And hopefully, when things do continue to reopen here, we can proceed with some sort of normalcy as far as society and as our life goes. For today's topic, I wanted to discuss how we manage concentrated stock positions. And so if you're tuning into this, you may be asking yourself, what in the world is Jake talking about? And so if you don't know what it is, that probably means you don't have it, or maybe you do and you've never heard it referred to in that manner. What a concentrated stock is simply when you have a majority of your portfolio or your investments invested in one security. Right? And so you might say, well, who in the world would ever just put all of their money in one security? It's actually a lot more common than you think. And most people that have this work at publicly traded companies. Right? And my compliance department doesn't like me to go into individual stocks for the purpose of this show. But let's just say you work at ABC Company or XYZ or 123. Normally, not always, if they're publicly traded, a lot of times they'll offer stock in your 401k in the form of a match, or maybe you can just buy the stock in your 401k. A lot of other companies will have associate stock purchase plans where you can pick up shares for yourself at a discounted price. Many times you also may be awarded stock options or restricted stock. So if you work at a publicly traded company for a length of time, you can imagine if you have several of these different ways of getting access to your company stock, as years go on, and if the company does well, all of a sudden you may wake up 20 or 30 years from now and say, oh wow, I didn't realize 70% of my net worth or 80% of my net worth is all in this one company. Which we have some unfortunate examples here locally in Kansas City about some companies where there was multi-millionaires over there that all got wiped out. It might not have necessarily went to zero, but they lost a significant part of their savings pretty quickly by some bad decisions on the company's behalf. So you have to be careful with it. So I'm not saying it's horrible to have concentrated stock. I'm saying that there's some things that you can do to protect yourself. And it's important to understand what risks you are having. Certainly if I had a new client walk in the door and I told them, we're going to manage your portfolio and we're going to put 80% of it in this one stock because we really like it, they'd probably look at me like I was crazy, because that, again, it's a very, very high risk. So we don't normally build portfolios that way, but we certainly can assist people in managing them. Okay, so that's what it is. Now, who has this type of stock? Again, like I talked about, if you have access in your 401k or you work at a publicly traded company, more than likely, not always, you may have exposure to this. And again, there's lots of times where awards are sent out to people in the form of company stock. Well, let's get into the answer then. So how do we manage it? Well, there's a couple of strategies that I wanted to talk about that are a little detailed, but there's some really interesting opportunities out there if you are approaching retirement and you do have a lot of stock built up in your 401k. And one of the strategies that I want to talk about today is called net unrealized appreciation, or commonly referred to as NUA. We do a lot of NUA analysis at Falcon Wealth Advisors. And what this means is if you've accumulated a lot of shares in your 401k over years of a company's stock, and that stock has performed well, you probably have some unrealized appreciation. Hence the term unrealized. So that means, let's say your average price of buying the stock was $10. Now maybe the stock's worth $100. where your appreciation there would be the $100 minus what you paid, which is 10, so you'd have $90 of appreciated stock in your 401k, which is awesome. Now, what NUA does is when you go to retire or leave your company, and there's several rules that are involved. So again, I would encourage you to do more homework, or at least talk to us at Falcon Wealth Advisors before looking at applying an NUA strategy. But what you can basically do is, rather than roll over your retirement or your 401k when you retire, or even leave it in the 401k, you would bring that company stock out into an after-tax account. And at this moment, you would only pay taxes on your cost basis. So in my example, it would be the $10 per share. And then that gain that you haven't realized yet, the net unrealized appreciation, when and if you decide to sell your stock, would be taxed at your long-term capital gains rate, which for most people is lower than their ordinary income tax rate. Now again, full disclosure, you want to double check this with your CPA. Again, we at Falcon Wealth Advisors, while we do certainly do tax planning and financial planning very well, in my opinion, we are still not tax advisors. So we always want to consult with a CPA before firmly executing on the strategy. But the whole idea is that you may be able to get some favorable tax treatment from having all of this appreciation in your 401k. Then we look at doing diversification slowly. I'm not a big fan of ripping the Band-Aid and just telling someone they have to sell all of their company's stock. Certainly not. Especially if you're close to retirement, there's some strategies that we can use to potentially save you a lot of money on taxes. Okay, so that's strategy one. I mentioned that I had two. Now the second one, unfortunately, again, for compliance reasons, they don't like me to go into much detail here, but another way you can manage a concentrated stock position is through trading options. And we at Falcon Wealth Advisors do a lot of options, and I'm talking about selling or buying calls or selling and buying puts. Now, the reason my compliance department doesn't like me to talk about it openly is because options trading is considered an advanced investment theory or strategy, and it's not for the broad public to go out there and try on their own. But from my point of bringing it up today is that if you have concentrated stock, I would love to talk to you about ways that you can utilize options trading to manage your position, where you can potentially protect or limit your downside while also generating an income stream, right? And so there's a lot of different opportunities out there in the options market. Certainly when you have volatility pick up, it's a very opportunistic time, in my opinion, to look at trading options. Again, I wish I could go into detail, and we're actually, stay tuned on that. I may start hosting some webinars, some privately hosted events. So if you're interested in learning more about options, I'd love to get a pulse of our audience to see who would like to do a private event, where basically I would set up a Zoom or a WebEx call where we would have a private room of maybe 20 or 30 of us, where we could go into these option strategies in a little bit more detail. Because again, we do a lot of it at Falcon Wealth Advisors, and in my opinion, we've been quite successful with helping clients. Again, it's not a one-size-fits-all approach, and everybody's performance is going to vary a little bit. But if you have a lot of publicly traded stock and you're not looking at options, I think you're missing a big part of an opportunity there that you could potentially protect yourself or generate an income stream off of that position. Okay, very good. So these are just, again, two strategies. There's many more to talk about regarding managing concentrated stock. But for today's show, that's all the time that I do have for today. So if you're watching this out there on social media, please feel free to share and like our info or our content. You can find me on Instagram, Twitter, Facebook, and LinkedIn. If you're watching this on YouTube, thank you so much for subscribing and listening to us on your favorite podcast. Thank you so much for tuning in. As far as my fun facts today, not much has changed. I'm very blessed, individual, you that know me. I have been able to play a lot of golf lately, which has been a lot of fun. I'm getting to work. My pooch, Einstein, he continues to grow in his personality. We just celebrated his 1-year birthday not too long ago. Maybe we can flash up some pictures from the party that Rachel and I had for him. Unfortunately, we didn't have any guests over, but the three of us celebrated together, which was a lot of fun. So like I said, that's all the time that I do have for you today. That's all the time that I do have for you today. As always, we hope that all of you are staying healthy and safe, and we look forward to everyone having a great week.